Fantastic. All right, great stuff. Well, listen, firstly, thanks for having me. Let me just get myself a little bit more room here on my screen. There we go. Firstly, thanks a lot for having me. This is Sam Evans with you of Online Trading Academy. I'm one of the instructors at Online Trading Academy, lead instructor for the Forex and our online program, the Extended Learning Track. That's what I'm in charge of. Also classroom-based, but do work in the futures, Forex options, and so on as well. I think this is probably now about my third or fourth webinar I've done with you guys. I'm doing this on a monthly basis and stuff. So it's been a real good fun doing it. It's been really nice spending some time getting to know you guys and seeing more and more people come into the room as well. So I appreciate it. The last few times I've been here, I've done actually some more lesson days on here. But I've had a load of emails, people asking me, my thoughts on the market, asking me about ATR, things like that as well. So I thought, I'd take this 45 minutes today to do a little bit of market outlook with you and see if we can find some opportunities. It'll give you a really good idea of the rule-based core strategy that we teach at Online Trading Academy as well. So there are obviously many facets to this. Our programs are quite long in their duration as well with ongoing support. So I will get as much covered in this 45 minutes as I can. Feel free to ask me questions as we go through as well. And I'll try and cover some, obviously, the best pairs that I look for and how we can find, obviously, those opportunities too. Before I go any further, I don't know if it's just me, but I've definitely been finding, I would say, and I don't know what the other educators have been saying on here, obviously, but I've been finding over the last few months, this market a lot more narrow range bound. I've had emails, people saying, I'm not hitting my targets as much. It's been a difficult market as well. Would any of you guys agree with that as well? Maybe that you've been having just finding it a little bit more of a contracted, choppy market. Yeah, and it stinks. Forex go. I like the way you've been saying it. Yeah, I have to agree with you too. I will say this. I've been trading for 10 years. I've been doing it at all different levels, worked with funds, worked on prop floors, doing it myself as well. And it's been one of the more challenging times, I would say, definitely. What I just say to you guys is don't get disheartened about it. It's kind of like we have a saying in the UK, you wait, it's about 6 or 7 weeks. It actually has been longer than that. You're right. We have a saying in the UK, basically saying you wait an hour for a bus and then they all come along at once. I think you've kind of got to take that attitude with this. Yeah, you've got to kind of take that attitude with this. The opportunities will come. I've seen some decent moves in the markets over the last day or two, particularly on the pound. So we can take a look at some of those pairs. But you know what? There'll be plenty of good opportunities that come along, and you'll be forgetting all about this period in time. So just bear with it. I'm doing it too as well. I apologize if there is an echo. If anybody else has got an echo, let me know. Sometimes it could be a log in, log out, log back in correction, or maybe administration can help on that one as well. Okay. In Africa, we wait 3 days for a bus, and when it shows up, it's fully packed. You know it. You know it. Joe just asking, do you think it's because of the impending dollar collapse? Who knows? You know what? I'm not a fundamental guy. The last webinar I did on here was not about that. I do know that the dollar is a major thing, and I'm going to start looking at the dollar right now and just give you a little bit of a picture of where it is, because the dollar, and I'm going to start my analysis on here. You should all be seeing a weekly chart of the dollar, right? This weekly chart that we've got up at the dollar right now, what I'd like you to notice is here at the bottom, and it's something that I pay attention to as a day trader. I'm a day trader. Every day I trade, okay? In fact, I've got 6 weeks off from teaching in classrooms in the States. I only really teach in the US, even though I'm based in London. I am actually moving out to the United States in 2015 permanently. So I do most of my teaching work in the US, and I do my online webinars as well. So I've had 6 weeks period here where I'm at home, and I'm day trading every day, and I'm doing my swing trading and so on. So I look at this average true range that we can see on here, and I look at it to kind of manage my expectations of the markets from a day trader's perspective, and also from a swing trader's perspective. Okay, makes sense, guys? And what you can see very, very clearly that has been happening, if you look over the last year here, you'll notice that the ATR on these weekly charts has just been steadily declining and dropping. Okay. It's in fact pretty historic lows. Let's go back and take a look on here as well. And if you go back, you are going to see ATRs have been around this level nearly 14 years ago in 2007, and then about 20 years before that, 10 years before that as well. So you can see we are at historic lows. So what does that tell us? When markets are usually at lows or at highs, what do they have the best chance of doing, guys? They have the best chance of making a reversal. And ATR and patterns that you see that the market money flowing into and out of the market is a very common thing. So what we need to kind of understand is it's gonna pick up. It's getting as low, it's low, but the market's not going anywhere. So let's just be a bit more picky. And let's use our understanding of the dollar right now, looking at ATR's low like this to manage our expectations. And if you take a look, I'm not a big guy for trend. I like to start on these weekly charts. But if I was looking at this chart right now, I'd be scratching my head trying to define a trend on that. I don't know about you. To me, if you look at the absolute highs pretty much here that we've got over the last period of time from this last kind of 15 years and the absolute lows, would you agree with me? We're kind of in the middle, would we not say? We're slap bang in the middle. Let's not make it too complicated, right? Let's not make it too complicated at the end of the day. What you've got to understand, markets are all about reversion to me. They're all about reversion to me. This is how they operate. This is how they work. So when you're in the middle here, you've got to expect that the price is going to spend most of its time here in this middle. So, if you kind of segment this middle section off here, price is going to spend most of its time chopping around here. We want the opportunities to sell as high as we can or buy as low as we can. And right now, the highs and the lows that we've got are obviously we can narrow down, obviously into a smaller window where within this kind of range, we've got a defined range right now. So one little tip that I always like to kind of pass on to students and people I'm working with in the market is, yes, you've got these huge extremes up at 88. You've got these huge lows down just below the 74 on the dollar as well. And the reason, by the way, I'm focusing on the dollar is because it is still the primary reserve currency in the world. Okay, yes, a lot of people have been slating it. A lot of people don't like it, but I will say this, if we see a collapse in the market and there has, some serious selling pressure comes into the market. And by the way, don't be a hero and try and pick the top on the stock market quite yet. You're going to have plenty of time to obviously see that come in when it actually comes in, guys. But if we do see a drop in the stock market, we're likely to see quite a big rally in the dollar index. Why? A flight to quality, nothing more than that. A flight to quality of basically, money flowing out of stocks and getting into the US dollar because, US bonds are still, we look at treasury notes on here, US treasury notes and gold, absolutely, and, treasury notes are government secured. You can still look at treasuries and so on. They've been in a very long-term upward trend as well. And obviously they'll become a little bit more attractive if interest rates go up to people because the big investors are going to want to have a safe place to put their money. And, US bonds still have some of the lowest yields around, but I look at yields on bonds, a little bit like getting a loan. If you're a higher risk loan applicant, they're going to give you a higher interest rate, aren't they? If you're a little bit safer to lend money to, you're going to get a lower interest rate. Do you understand? So when you look at a bond, which is nothing more than a loan to a country, when you actually look at that as well, don't be too surprised if you see, that the companies with the safest, if you like, balance sheets, getting the demand for their bonds. Now, don't get me wrong. I don't think the dollar's the greatest currency in the world. I don't. I don't really think there's any great currency out there. But I don't really have to worry about that. I'm a trader. And the good thing to do is to move your money into one thing or another. So as all been saying on here, should we position in gold and bonds now? Yeah, in time, you want to buy gold when it's cheap. You want to buy bonds when they're cheap, okay? But again, you shouldn't be worried about just saying, hey, I'm going to take this long-term outlook. Long-term outlooks are all well and good. But, sometimes you need to be bullish. Sometimes you need to be bearish. So the cool thing about the Forex market is there's always going to be opportunity if we're willing to sit on our hands as well. It's just typically from a fundamental point of view, guys, you're likely to see rallies in the dollar when you see the stock markets roll over. The dollar's just the best out of a bad bunch right now. Okay, there are plenty of currencies. I mean, listen, everyone was writing off the euro a long time ago, and then it made a great rally through the back end of last year, and now it's kind of been doing a bit of a sell-off. My point is this, guys. If you take a look at where the dollar is right now, there is some decision in the market. So we have to respect that. And if we look at this shorter-term range that we're in at the moment with these highs, Swiss franc's another one as well. We can take a look at some of those majors on here, absolutely. We've got short-term highs from the back end of last year into the early part of this year. You see this, looking at this 6 months to almost a year of price action that we've got here on this chart. We're in the middle, within the middle. Do you understand that? You see, we're really in the middle of being in that middle, aren't we? So let's understand that if the dollar's undecided, that is going to impact the other currencies. It's going to make it a little bit more challenging for the euro. It's going to be a bit more challenging for all of these markets. So what I'd say to you is you don't necessarily have to use a dollar to time what you're going to do, but it gives me a good solid outlook. What I'm saying is if the dollar does, let's put some numbers on here, by the way. Let's put some numbers on here because I'm going to mark off a couple of levels for us, okay? Just for you to kind of keep an eye on, and these are the levels that I'm looking at too. This is where I see the last significant selling action here. This is where I would be seeing the last significant buying action. This is what at OTA we would look at as a demand and a supply zone. And you can see, guys, just as a little bit of word of caution, don't get too, do you see this candle here from 509.14? Do you see in May we just went below those lows a little bit, failed to close, and then rallied all the way back up again? Markets love to do that. They love to fake people out. They love to overshoot a little bit, right? That's just what they do. They just love to do that. So, you know, at the end of the day, guys, look at the range as it's standing right now. Now, what I would be saying on here is, yes, if we do break higher on here, we've got another great area where some big institutions were selling the dollars before. This would be our next point. So if we can break out the highs of these range, we could see a bit more upside in the dollar. That would put the pressure on the pound. That would put pressure on Aussie. It would put pressure on Swiss franc and all of the other major currencies, okay? So always be aware of where the levels are just above and just below. But guys, the idea is now deal with what you've got right in front of you. And what you've got right in front of you are these particular areas here. So just get some numbers on here for you. I'm just going to insert an analysis technique on this particular page, okay, for you. Let me just pop this up. This is a great little tool that I have on TradeStation that I enjoy that just puts the numbers on here. So you can see those on there, guys. You see those? So what we're looking at on this weekly area is 80.87 to 81.49. 79.60 to 79.01. Now, how I'm going to use that is I'm going to keep this weekly chart up. And what I'm basically going to do on here is I'm going to just say to myself, you know, should we be coming into this area here? I'm going to be focused, being a bit more bearish on the dollar, because every time the dollar gets into this area here, we get some major selling pressure come in. Every time the dollar comes back to the 79.60 to 79.01 area, and if you wanted to move that down, just to take those lows maybe to around 78.91, that's perfectly fine. If we get down to this lower point on here, we're probably going to expect to see a rally. Okay, and yes, the zone is getting weaker, but one of the things, Sunil, I'll come back just a second, Sunil. I'm going to answer your question in just a second. What I want to do is I don't want to fall into the trap, however, of assuming just because the price has been there a few times that the next time it's going to break. What you could do as a trade plan on here is we could say to ourselves, okay, it is getting a little bit weaker, but look to the left. If it does get a bit weaker, all we're going to probably do is touch down a little bit lower. So what you could actually do is just give yourself a wider area and be a bit more extreme, because, guys, the dollar has got room to go to the downside. See here, below this area, but it's got to deal with that buy, all those buyers in that area. And in a range-bound market, what happens, guys? In a range-bound market, what tends to happen? What happens? Highs repeatedly get tested, lows repeatedly get tested. You understand? It's only in a trending market where we typically see resistance areas breaking and support areas breaking, or as we call them, supply and demand zones being broken and violated. So what you could say to yourself on here, guys, is, you know, you don't want to be selling dollars into this area of demand here. You wouldn't want to be selling dollars, buying dollars into this area of supply. Should this area of supply break, perfect. We've got another nice area just above it. But what we need to do as active traders, and why I like working on this weekly chart, is the weekly chart gives me plenty of room to time and look at the other markets to create on those smaller term opportunities. So therefore, my trade plan is going to be, between 80.87 and 81.49. I'm expecting dollar pressure. So I'll be looking more to buy euros, buy pounds, buy Swiss franc, buy yen. The yen and the Swissy, by the way, I kind of treat as their own beast, because the dollar, the yen, and the Swiss franc have all got that safe haven quality, haven't they? They've all got that safe haven thing about them. There's the flight to quality. So you can get some very mixed reactions, and those currency pairs can be, but definitely the euro, definitely the pound, definitely the Canadian dollar, definitely the Aussie dollar. Okay. So I haven't traded the dollar yen. I haven't traded the dollar Swiss on those combinations of those three currencies, the dollar, the yen, and the Swiss franc for a while now. So I like to find markets that move a little bit much as well. So, it's just an idea is get the dollar, give me a bit of time, and you can see when the dollar's testing these major areas, that's going to likely have an impact on those other currencies as well. So they're the numbers that I'm looking at on the dollar index, guys. So right now it's telling me, Sam, you've got literally indecision in the market. I'd like to sell a bit higher on the dollar and be a buyer of other currencies. I'd like to be a buyer lower of the dollar and be a seller of those other currencies. But now's not necessarily the time to do it. Now, I get some of you guys are going to be day trading Forex on here. My personal thing is I feel like as an educator, I have a responsibility to kind of steer people into the realms of safety. And I don't think day trading the Forex markets has been as easy to do lately. I think there's been better times. I think that the currency futures markets are a lot better for day trading personally. A lot better. However, maybe on a next webinar, we'll look at currency futures. Maybe next month when I jump in the session on here, we'll take a little look at the currency futures if you guys would like that. And we can take a look at that because I think that's a much better vehicle for day trading. And I think these spot Forex pairs are much better for our swing and our position trading. All makes sense, guys. That's just a little technique of something that we teach, that I teach my students as well, just to give me kind of an outlook on here. And obviously on smaller term time frames, you're going to get, obviously, daily charts within here as well, to help you too. But what I want to do is I want to look at this, obviously, from a big picture outlook on here. So let's go through some of the majors too. I'm not really bullish or bearish. Here's the thing. I can take this right now that based on what the dollar's telling me, I don't have a very bullish outlook on the majors or a bearish one. I'm kind of neutral, which means I'm going to consider buys and I'm going to consider sells. Does that make sense, guys? I'm going to consider buys and I'm going to consider sells based on what the dollar index is telling me at the moment. Because remember that dollar index really is it's an overall outlook. You understand? It's an overall outlook of the market. All right. So let's start with the Euro USD, hey, and see where we're at. And we'll see today we've had a bit of weakness in the market. What I'd like to see is if we've got anything really kind of quality coming up. Now, the challenge we've got at the moment on the euro, okay, and I want to give you kind of, again, a little bit of a big picture outlook on the euro, because I know a lot of people love trading the euro and see, but if you actually do take a look at the euro, kind of similar, isn't it, to the dollar, wouldn't you say? If we actually take a look at that picture again of what we just saw on the dollar index, remember what I did? Kind of marked off those absolute highs here, marked off those absolute lows here. And then if you look at kind of where we're at the moment, there we are, slap bang in the middle again. Do you see? Do you see the similarities there as well between the dollar, what we were looking at, and also looking at, obviously, the Euro USD? Well, the thing is, you're going to see quite a lot of positive correlations with the euro dollar and the dollar index. And the reason for that is because obviously when they amalgamated all the European nations into the single monetary vehicle, the euro, the dollar index then obviously had the biggest chunk price weighted to the euro because the Deutschmark, the French franc, the lira and all that were all swallowed up into it. So the peso and so on. So obviously what we've got to now understand on here is the euro and the US dollar index have quite a high correlation between them as well. So again, if you've been struggling with that with the euro lately, one of my best bits of advice to you guys is if you take a look at the last few weeks, 1, 2, 3, 4, 5, 6. This is the 7th week where we've been chopping around on the euro. It's very easy to get excited every time you're on the right side of a trade and think, hey, boy, this is the big one, isn't it? Guys, you've got to be objective about this. At the end of the day, this market is in a very tight range over the last, nearly 2 months now. Next week, it will be the second month. It could break out, obviously, up or down from this particular point. But where we are at, we've been in an upward trend as part of a downward trend, as part of an overall range. Let's just treat the big picture levels for what they are. What I personally really need to see on the euro is a really solid break of the 135s. And on this weekly market here, the area that I'm dealing with, that I've got marked on my charts that I'm going to share with you now, is this area here. If you take a look, we've got 134.90 to 132.88. Now, this is a huge zone. Again, this is more for the position traders out there as well and looking at, but it gives you a good idea. We'll break it down to the dailies in just a second. But what you're actually, seeing on here, what you're actually seeing on here in this particular market here is a major round number, 135s. There was a lot of buying pressure in here. We've got to deal with all of these buyers that were in this particular area before we can actually go lower. Now, it could go a little bit deeper. There could be tests of 134 on here, but I want to treat the market as I see it. For me, let's go into the daily charts and see what we need to expect, because again, if I wanted to get bullish on this market, I want to see a clean break of 137. So what I'm saying is it's going to be sensible to be playing the 135 to 137 range for now on the euro dollar. Let's look at what that looks like on the daily charts on here. Let's just mark that off so we can see as well. So I'm going to mark off some guideposts on here and show. Now, the thing is as well, this area of demand on the daily charts that I'm marking off. And I tell you one thing that's very cool about the narrow ranges that we've been seeing and the drop in the ATR that we've been seeing lately in the Forex markets. One of the coolest things about it for me is that I'm finding more trades off of the daily charts, and it means it's just less analysis that I have to look at. You understand? It means if I've got less analysis I have to worry about, less analysis I have to look at, and so on. So I can really focus on those bigger picture areas. What we've got therefore is some really good kind of healthy selling pressure. I'm going to mark this all off as one area for you, because you're going to see levels retested over and over again. Okay. I think a daily chart's good, by the way. Forex guys just asking when you trade the Forex, you keep a daily chart. I wouldn't, of the dollar index. Yeah, I personally wouldn't go any lower than that. I wouldn't go any lower than that. Okay, I wouldn't really go any lower than that. That's all you really need to understand about it, because you're really using it just as a big picture kind of odds enhancer. Now, this area here that we've got on this low 135s area, okay, is being noted out by Talon on here. Zone's been touched several times before. And I get this from my students in the Online Trading Academy's XLT as well. It's been touched a load of times. It's going to break. Well, how many times have you also been in a trade where you keep thinking, this is the one, this is the one, this is the one, it's going to go, and then it reverses on you? Thought, damn, I thought it was going to break that particular time. It happens, right? And as you rightly say on here, Talon, the more times price keeps coming back to an area, the more likely that those orders, those latent orders that were sitting in the area, can be absorbed. You're completely right to say that. In a rangy market, especially when you're sitting quite in the middle of a market that's losing its direction. And again, if you see it on this chart here, you can see between those extreme highs and those extreme lows, we're very much in the middle. We've got to expect that those levels could be tested a little bit more. So how do we play it? Well, we maybe say to ourselves, hey, I'm going to wait for a little bit of upside on here. I'll wait for a little bit of upside, and then I'll go to some smaller time frames to maybe engage it. So if you're not feeling comfortable on here, okay, with trading these markets because these areas are being retested, you can sit out on it. The nice thing about it, however, is from where we are right now, I have to be bullish on this market. If someone was saying to me, Sam, you've got to take a trade on here, I'd say to myself, yeah, you know what? I've got to be bullish on it right now. Until this area breaks, I'm going to trust what the market's telling me, because Guys, I don't know what's going to happen next. I haven't got a clue what's going to happen next. I never do. All I do is I look at the chart and I say to the chart, well, look, the last time prices were here, what did they do? Now, I do look for some subtle clues. And while we've got some nice areas of supply, okay, I don't think that's a bad place to be a buyer. I think if you're ever buying in an area where it's cheap and relative to where price is right now, it's cheap, I haven't got a problem with it. You know, you got to look at it like that. No one knows what the market's going to do. All you know is what the market's showing in front of you right now, right? That's it. Okay, I'm in trades right now. I've got a day trade going on while we're in the market, while I'm in here, and I've got no risk on the trade. I've got a little bit of profit locked in. I've got a target. I don't know if it's going to go to the target, but while I'm in it, see what happens. I've got a stop loss. I sold it high. We'll see what actually happens with it all. You know, at the end of the day on here, you know, that's all I can do. All I can do is trust where it's at. I can go take a little look and see on here, and yeah, I'm still in it. I'm still in this on an opportunity from a short up here. I've got no risk on the trade. Might as well leave it alone. It's the same thing, okay? And that's why there's nothing bad about it. If it matches your plan, you've got your rules in place. That's all good. Yeah, it's all good. I would just say as long as you've got a stop loss in place. That's what's important. And it's very hard. I don't have a directional bias on here at all because as I've shown you on that weekly chart, we are in the middle. And guys, sometimes, you know, just look at what the chart's telling you. Go back to that weekly chart. Who do you think is going to be looking at weekly charts? I'll tell you who's going to be looking at weekly charts. The biggest institutions out there, the big market institutions, the big fund managers, the big pension funds, the big hedge funds. Those are the people controlling the market, the banks, right? They control the market. We don't. We're the small fish. And if the big banks aren't piling in orders to buy the euro and sell the euro and not creating any real trend, who are we to argue with them? If that's what they're doing right now and that's all they're willing to commit to it, we have to trade what we see and not what we think. Because what I've learned in my 10 years is what I think doesn't actually matter. And I know that's a tough thing to get your head around as a trader, but what you think doesn't matter. Yeah, you've got to have an opinion, but you got to just trade what you see. You got to trade what you see. I had a student, Jim, who I just was teaching in Philadelphia, literally three weeks ago. Took my class with me. This was a futures class. Took it with me, and I can say these results publicly because I can back them up with the evidence and the truth. Because he said to me that he was very comfortable to share it to tell people. But let's talk to him how to day trade futures, stock indexes, and I gave him obviously the rules, and he went through. And over a 2-month period, he was wrong 70% of the time over a 2-month period as a day trader. Wrong 77 out of 10 times was wrong. Right only 30% of the time, and he just shy of doubled his account, risking 1% on each trade. Okay, I won't make statements like that if I couldn't back them up. So, you know, I've got obviously the stats to see it and everything. And I've got exactly big wins, very small losses. And you know what? The whole thing is sometimes long, sometimes short, sometimes long, sometimes short. It doesn't matter. He's just trading what he sees, not what he thinks. And so I'm the first person to say, I don't know anything. I just know what's in front of me, right? And right now the institutions are telling me, hey, you know what, Sam? We don't know what we're doing. So if they don't know what they're up to, you know what? I don't know what I'm going to do. I'm going to just trade those lows, buy those lows, sell those highs. Is that making sense, guys? So Albin, as you were saying, great, you're in the trade. You know, all I'm going to say to you is have a stop loss in place. Let's look for where we think this thing could rally to. Now, you can see we're getting a little bounce off of these little areas here. My colleague Dan Sugar in Florida, he calls these hairy bottom candles. You know, there's little wicky hairy bottom candles. You know, there's a lot of buying pressure in here. Look how it keeps kind of coming off it. Hairy bottoms and hairy tops. I do like that one. I think it's quite fun the way he describes it. What I would say to you is also look out for what the market is showing you. If we do get a bounce on the euro, you've got to look for the subtle clues. It's like detective work. One of the things that we've got to kind of be aware of right now is that there is some supply. Okay, there is some supply coming into the market right now. What I can see is the last time prices were here 3 days ago, we had a bit of a pattern of basing, and then we had a very strong drop. I'll get your question in just a second, Ray, okay? We had a very strong drop in price, quite a decent move, okay? When I say a decent move, it's like 70 pips, but 70 pips, if you look at the ATRs right now, let's take a look at ATR. Your average daily range right now on the euro is 44 pips, so it nearly doubled its ATR over a couple of days. It moved its, at the extremes of its ATR. So seeing that and obviously seeing what's happened on it, had a decent move. So someone was trying to sell a lot more euro than they were than was available. And well, let me answer that question as well, CC, in just a second, okay, about the news, all right? So we had this drop in just a good drop down from this area. So all that tells me is somebody was willing to sell a lot more euros, okay, in this area here than they were available to sell. Because if there were enough people willing to buy the euro at 136 as to match the amount of people who are willing to sell the euros at 136, this drop wouldn't have happened. That we know. That we know. Now, here's the thing. Is it news related, right? Well, you can say it happened because of the news, but if you look back beyond that, actually it happened because there were more sell orders than buy orders. That's why it happened. Yeah? Auntie Yellen, right? I prefer her to Ben, I have to say. I don't like to be too biased. I think it's great having a woman in charge, right? It's cool. She's cool. I like her, She always looked a little bit happier than Ben did as well. Not that I have anything against Ben, but she just looks a little bit happier to me. 136, mind you, let's give her, she's new in the job, right? She's new in the job, so let's give her a few years and she probably will start looking upset and miserable like Ben did, right? Because she's new. It's probably all a bit of a novelty for her at the moment, because that's one job I wouldn't want. I don't know about you guys, right? So we'll talk about this in a year or two from now in one of these webinars, and we'll say, yeah, we said Yellen was looking happy. Yeah, she ain't looking so happy right now. Listen, guys, news or not, one of the things to remember, guys, is there were more sell orders. There were more sell orders than there were buy orders in that area. And I don't know what those reasons were, but you know what? One of my very first mentors, and I know you guys are probably very familiar with a chap called Sam Seiden. He's won a lot of awards with FX Street. He was a good friend of mine. He mentored me about 6 years ago. I worked with him very closely. He's the guy who put me in charge of the Forex program in XLT for OTA, and, gave me the opportunity to write the articles, which you guys kindly read and so on. He's a good buddy of mine, a very good buddy of mine. And so, he basically said to me, all news will just happen, whether it's going to happen or not. All the news does is causes the price to move where it was going to move anyway, right? It will move where it was going to move anyway. So it's the orders that shape the market. That's all that's going to happen, right? So don't get too worried about it. Some of the best levels I've ever had are triggered off of areas where previously they happened because of news, supposedly. If there are no buy orders, who bought the sold positions, right? So what you're saying is there weren't enough people willing to buy from those sellers at that price. So what's happened is if you were willing to sell 100 tickets here and there are only 20 willing to be bought at this price, once those 20 were basically bought and you still had 80 left to be sold, those people have got to make a decision. Well, am I going to basically sell a bit lower? And obviously they sold some of it a little bit lower, because the big bulk of orders didn't step in till here where the price has stopped. You understand? So that's all it is. They've only got some of them filled. Then they've had to make the decision. They can't get them all. It's like me saying, hey, you know what? I got $20 million in the bank and I want to buy myself 10 classic Aston Martin DB5s, right? Well, fine. I might have all the money in the world, but if I can't, I might not be able to find 10 Aston Martin DB5s because there's just not enough people out there willing to sell them to me. Does that make sense, guys? So I can be willing and have the capital to buy something, but I also need the supply. It's demand and supply, right? That's all it's back to is, why is this supply? Because there were more willing people to sell than there were to buy from them. And if there's more supply than there is demand, prices come down. Likewise, every time we got here, someone's saying, I'm willing to buy a lot of euros here. I'm willing to buy a load of euros, but there's only so many on sale. So once they snap those up, they've got to make decision. Well, I got some at that price. Now the trend's taking off. I'm going to join a little bit along the way. Now, Ray was asking me before, and I just want to answer this question before I move over again, is in a range-bound market, trend will kill you. What you've got to understand is, I know that the saying, trend is my friend, trend is my friend, trend is my friend. And, you know, beyond the scope of this webinar, I can't go into the level that I'd love to, because one of the big specialities I have is trend. Okay, I love. But my theories about trend are very simple. You know, if it was easy as just following a trend, everybody would do that, and everybody would have a very stress-free life trading, right? Everybody would do that. Everyone would go, oh, well, the trend is up. Great. The trend is down. Great. Like the trend was up between here and here. Now the trend has been down between here and here, right? So this is why we like to focus on, and everyone will go follow the trend. Well, I don't know what the trend is right now. It's in the middle. The euro's stuck in the middle right now. There is no trend. There's always a trend on one time frame. There's always a trend on another time frame. The thing is, like I say, if it was as easy as just trading a trend, everybody would make money just trading what the current trend was, and no one would stress about, well, why did the trend not carry on? Because it was in a downward trend. Yeah. Okay. So, you know what? You go, that's it. And at the end of the day, guys, it's like all I care about is what's in front of me right now. If I got a red light, if I'm approaching a red light in the car, I stop, I respect it. If I got a green light, I go. Right now, you've got a red light. There's a lot of buyers in this particular area. If this area gets taken out, then guess what? Well, the market's going to have another tough time because going any lower, because then straight below that, we've got another huge area of demand on this daily chart. Yeah? Well, we had another huge rally from where institutional buy. Now, listen, if I wanted to buy euro cheap, I'd be buying it down here because my risk is low and my reward is high. Yeah? So it's, you know, DZ Vista, the euro dollar volatility is so bad because you know what? The big institutions are undecided. They're just saying, hey, I'll buy it low, sell it high. Buy it low, sell it high. Is there enough money to trade between these levels and make money? Absolutely, guys, but you've got to stay out the middle. So for right now, I'd be bullish on the euro, specifically between where these areas are. Okay, and I know this has turned into a little bit of a lesson as well. So I hope you don't mind, but, you know, it's all good at the end of the day, I hope. And, you know, from this 135.32 area, I'll look at the Aussie next. I said I would. From this, it seems that my trade stations kind of had a little crash on me here and locked up as I was trying to just do something on it. So bear with me a second. I was trying to put the numbers on here for you, and it seems that I've had a little bit of a crash on my charts have completely locked up on me. Oh, there we go. Hold on. Hold on. 1 second. Let's see and try it again, huh? You see, I got the little ring of death. Okay. Yeah, it doesn't like it. My charts don't like it. I'm gonna have to just let it not click too many buttons. So listen, I would be bullish on the euro up to around 136 right now. Yeah, right now I'd be bullish on this. My only concern is there's a slight bit of weakness maybe in the euro at the moment. And we've got to deal with this 136 area. This will be important. So if we do have a rally, okay, that's fine. Let me give you the number. I'm going to give you the numbers like this. For between the 135.29 stops below 134.78. I don't think we need to take as much of a stop as that. If we see a bit of upside tomorrow, stops below the most recent lows as well. But it doesn't matter that the level's not fresh because in a range-bound market, it's not going to be fresh. Okay? And the problem you got is if this area breaks, you got another area here between 34.79 and 34.03. I would be more of a buyer right now because the last time prices were here, I'd expect prices to rally to around the 135.97s. And then I'd be quite happy to kind of look for a short back down to that area. This new area of supply has got me interested between 36.02 and 36.41. That for me is important. If we break that, we're going to make a retest of 137s. Okay. If we can get back up to 137.77, that's my last bit. Then we're going to have an easy run to test the 139. But we've got to deal with these two ceilings right now. Okay, we've got to deal with these two ceilings right now. We've got to trade what we see rather than what we think. So, you know, guys, use the daily chart as a guide, the major levels as a guide, and then on your smaller time frames, you know, you can use your different entry techniques. But look at ATR. until this ATR starts to pick up, trade the ranges as you find it. I'm going to give you one other thing to think about here, guys. We'll go over to the Aussie dollar. Is if you're finding the euro hard to trade, don't trade it, right? Don't trade it. There's plenty of other things that we can trade out there. You know, everybody's very about the euro, all about the euro, all about the euro. You know what? You don't have to be all about the euro. Why don't you trade some of the other great cross pairs as well that are out there? Now, the Aussie dollar, let's take a look at it on the weekly and the daily charts for you too. Aussie dollar is kind of, again, established a nice area of support here. There's a kind of a nice little area of support that we've put in on the Aussie. It's slowly ground its way a little bit higher on here, between 92.87 and 92.04 as well. For Forex, 4 hour is the lowest time frame. We've got a nice area of support on here, which is very important because this 92 area is all that we've got. We break 92s, we're going to see a retest down to the 0.921s, okay? That's all that we've really got on here. Futures, the lowest time frame. Well, I day trade those, and we're looking at kind of like 30-second charts, very small 30-second charts. Okay. I would say on here, my eyes are really focused on, and I'd like to see it. And I think if this can continue, I see a little bit more potential upside maybe in the Aussie, however, especially if we can get a little bit of a rally in gold too. I do see a bit more potential upside in the Aussie, maybe up to around a test of this 96 area. We've got some demand around here on the weekly charts. It's holding. I think that obviously all we've really got to deal with, there's not a whole lot of supply to stop this for a short-term test of around 94.80 on this. There's a new kind of base that's formed here that wasn't here, and I like it because it's a very clean area with plenty of room to go for a test of the 90s just below it. So at the moment, we can see that this daily area today is being respected. These daily areas of support and demand are being respected quite nicely. There's not a whole lot of major, basically, supply here. If this supply was as good as it was looking on here, and that base is very wide, we would have had a bit more of a sell-off on this. So I'm right now, you can see, look, we're at a daily area of good support right now. We're getting a retest off of it. For a confidence booster on here, we can break 94s and trade above 94s. We'd see a retest at 95. And then what I'm going to be looking for on here, what I'd be saying to you guys on here is a nice little area for, if you want to be a little bit more conservative. Yeah, a little bit more conservative. I know I said the regions of the 96, but I'd rather on here, just for you guys right now, be a little bit more conservative. I would be having a test of, trading between where we are right now, 93.45 and maybe the 95.02s, and then tighten up stops. Then I'd be saying, hey, let's push for the 96.50s to the 97s beyond there as well. Okay. Yeah, I do think that the trade stations are very important one manage as well, because you need those very fast charts for a very clean level of accuracy on those smaller time frame charts. You need to, if you're going to trade futures, if you're going to trade the futures markets, you need to do 10 trades a month, basically. You need to do 10 trades a month, and then it's free to trade, and then you've just got your commissions and so on. So at the moment, just to give you the daily areas which I'd be looking to hold at the moment, I'm really bullish above 93, 93.43 and 93.12, bullish in this area, looking for a first target around 93.36, and then I say conservative about 94.95, and leaning on this higher area between 95.10 and 95.47. I would say, again, first target in the middle and then play the lower end of this range for now. The liquidity is really good. Yeah, I mean, in the currency futures, it's good, but you just got less choice. You've only really got the pound dollar, euro dollar, and Aussie dollar, and the Kiwi dollar, not the Kiwi, the Aussie dollar, yen, and so on. But I'll do a session on the futures with you next month. That's what I'll do that, because I'm getting a lot of questions about it. So, but again, I'll do that, and we'll have take a look at it together. But yeah, right now I've got to be a bit more bullish on the Aussie dollar pair, just based on what the chart's telling me. Now I just quickly take a look at if I've got time to quickly just see what gold is at, and where we're at on gold. Just see what the major where we are. I got to say on gold right now. if the current lows hold, let's just see where we're at. Let's just see where we're at. Yeah, I see a retest of these lows at 12.56. I see a retest of these lows at 12.56 available to us right now. Yeah, I would say a retest of these lows at 12.56, then I'd be willing to take another shot at it, but there's not a whole lot to stop it. I wouldn't be comfortable even really stepping into this until around 12.73 to the 12.66s, really at the earliest for a buy opportunity. Any nice little short-term pullbacks on the smaller time frame charts, I wouldn't mind shorting down to these areas. Especially if we can break the current lows that we've got at 12.92. If we can get ourselves below 12.92, there's nothing to stop us going down to the 12.57s on there. From a big picture outlook on gold, I would just, I would trade between your major areas on gold to focus on for the time being are really this upper range here and this lower range here. Because, again, there is a little bit of uncertainty and fear in the market. The VIX is up. Gold's an important player. We are a little bit more in the middle, but short term, yeah, retested the 1270s, but 1387 to 1432 and 1216 to 1182, they're really the confined to those ranges. So, laying on your shorts a little bit higher or your longs on here, just look at that range that's going on here. And, potentially we do have that inverse head and shoulders on there as well, forming. We'll have to play it. But for now, I'd say, wouldn't be too surprised to see 1260 as a retest and then maybe a low risk buying opportunity down there. Okay. Last question I've got time for on here. Sam, do you trade each time price comes to the level, or is there any technique? No, we use our odds enhancers, which are something that we go through in the OTA as well to qualify our zones and even level at greater level of depth as well. So I'm giving you kind of a good little guide on this as well. FX options I'm doing more on as we go. I'm just trying to really find a kind of a broker that I like working with that's going to really give me the ability to do some very cool things on it. But it's a tough one, to find a platform that really gives you kind of what you want to do. But I'll keep you posted on that as we go through. Guys, look, thanks so much. If you've got questions, let me just type in my my email address for you, sevans@tradingacademy.com. If you want to follow me on Twitter, I am getting more and more active as we go along. I'm getting more and more active on there. Do a lot of calls on the stock markets. I'm starting to do more and more on there as well. Just typed it in. My handle at Sam Evans Trader is my handle on Twitter, and all good. All right. Thanks so much, guys. Really appreciate it. It's good to see the rooms getting bigger as well. I love that, and I look forward to seeing you next month. Have a great week. Trade range as you see it, and thanks for joining me today as well. Thanks FX Street as well for being here. Cheers. Take care, everybody. Goodbye.